very good morning to our RANsquawk listeners. Welcome to the European Rundown for today, Thursday the 9th of June. Two real main things the markets now are awaiting is the interest rate decisions from both the Bank of England and also the European Central Bank. But before I get into a bit more detail on that, in terms of some of the things we have seen so far this morning, firstly, after a higher opening in equity markets in Europe, we have drifted predominantly toward negative territory now, which has provided a bit of a bid to Bund futures. Some of the peripheral spreads have also widened. One of the catalysts has been the latest report out of Fitch rating agencies, which has questioned some of the pace of reforms out of Spain's regions. Also as well, Nokia were downgraded by one notch by S&P, has also been noted, as their shares did drop around 1% individually as well. In terms of where we're trading in bunds at the moment, we've managed to pair back up above yesterday's high on that 125 level and are trading higher at the moment. In terms of looking forward then for these interest rate decisions in regard to the Bank of England, although the CPI continues to trend extremely high at a level around 4.5% at the moment, which is way above the mandated target of 2%. The overall fragility in the economic recovery in the UK and the weaker macro data we've had of late should see the Bank of England keep rates on hold at 0.5% today and the APF at 200 billion. The ECB press conference is really going to be the big one and could well add a lot of volatility to the market today. In terms of the interest rate, that should be a straightforward, unchanged decision at 1.25%. What will be key is the language in which Trichet uses, particularly at the beginning of his opening statement from the press conference, where most are expecting him to utter the words strong vigilance, which will mean that there will be hiking rates in July. If he uses the word very closely monitor, it could well delay that rate hike to the month after or potentially 3 months out. And if that is the case, we could see a potential for downside play in Eurodollar and the currency markets. That pretty much though concludes the opening wrap from me. We'll have another update. We'll let you know what Trichet said and how those interest rate decisions went. But for the time being, have yourself a great trading day.